me again is Senior FX Strategist Sebastien Galy, but this time to discuss some of Societe Generale's latest FX forecasts. Sebastien, as expected, the ECB left its key rate unchanged at 1%. However, recent depressing economic data out of the Eurozone might increase pressure for the ECB to act again at some stage. So what do you see as being the next possible future policy steps by the ECB?
Well, the likelihood is actually that they will extend a third LTRO operation. Spanish and Italian banks have essentially seen their liabilities melt as essentially people redeem exposures to these banks, and that means they have to replace this by new funding going forward, and that means that the probability that as we go into the coming months, there will be a new funding operation which will help. It has proven very effective to stabilize Europe, and particularly peripheral Europe. It has proven far more effective than bond purchasing.
In that case then, Sebastien, what are your current short, mid and long-term forecasts for the euro-dollar?
Well, we do expect euro-dollar to eventually break below 130, and we fully expect to be burnt out of our positions, as pretty much everybody is on this one. So we're stuck between 130 and 135 range. We do expect in the coming months, eventually, probably after a wash out of short euro-dollar positions, to break below the 130 handle. Then we expect maybe it'll move to 127, 126 in that region if we were really lucky, going for the 125 handle as the ECB reacts and basically starts to print some money. Of course, the only issue is that going forward, we'll see that the Fed probably going also for its own version of QE, so we'll be battling two bad currencies, the euro and the dollar, making it very difficult to trade. Over the longer term, we still expect actually euro-dollar to bounce back, as particularly on the back of some strength globally by year-end, and euro-dollar to move back to the one between 130 and 135 handle.
Despite the UK officially slipping back into recession, the pound's strength and multi-month highs against most majors has been quite interesting, as the pound seems to have become an unlikely haven in Europe. Do you see the pound making further substantial gains against the euro, for example, or has it had its run?
It has done well, and I'm proud to say that we've been the bullish sterling, so that's working out quite decently. The main reason behind it is it was cheap currencies getting less cheap depending on the valuation metrics you're using. There is still some potential for US sterling to grind a little bit lower. It's a less appealing trade than it used to be. Nonetheless, it's becoming more of a consensus trade, which means that it may have more momentum than it should. We've seen that also just on the back of diversification of central banks. For example, the Swiss National Bank has switched out of a euro long position in the last quarter of 2011 into a long sterling position in 2012 in the first quarter, suggesting that they're not the only ones, that the other central banks are building up their sterling benchmark. That is from very, very low level. But of course, it's helping to support that slash momentum trade, giving it a nice thematic. The reality is, of course, is slightly different, but it gives us the right storyline. So we do expect maybe a move on maybe one or two or maybe three big figures below, in the sense of grinding, not something massive.
Moving on to the Australian dollar versus the US dollar, do you think the Aussie dollar US dollar is now on track for parity in the short to mid-term?
Yeah, we expect Aussie dollar parity to eventually be touched. It's happening a little bit faster than we expected. The data recently out of Australia has been very poor, and the currency is better than it should. It's similar to the euro. One is linked to dollar weakness, and the second element is diversification out of the dollar into other reserve currencies, including the Australian dollar, given its yield. And it has performed better. It's starting to break lower a bit more cleanly. Parity is not very low as a target. We do expect eventually a stabilization of the situation in the broad Asian market, particularly in Asia. I know we've seen the beginning of some of these elements coming out of Asia if you look at some of the PMIs, and hence we don't expect a clean break below parity.
Thank you very much, Sebastien, for sharing some of your latest FX forecasts. That's all for Targets in Focus today, but join me again for another edition tomorrow. Goodbye for now.